Hello Pro Trader, welcome to today's video. This is a video where I teach you how to trade the market using the candlestick pattern. You ready? Let's go get it. Alright, welcome to my channel. My name is Gloria Doji. I'm popularly known as a Pips grabbing chick. I'm a Forex trader and the creator of a 17-part video course titled Trade to Profit. Now this course is the best-selling course that is helping a lot of traders trade the Forex market profitably. And in one of the videos of that course, I extensively discussed market structure and price action trading strategies using the candlestick pattern. So in this video, I'm just going to walk you through the very fundamental, the basics of trading the Forex market using the candlestick pattern. So you must have been hearing about the candlestick pattern. What are they? What do they do? And how can you include them in your trading? That's what I'm going to talk about today in this video. So let's get right to it. So when you think about candlesticks pattern, when you think about candlestick pattern, what comes to mind? You most likely see all of those things that do or does look like a candle. The minute you download an MT4, the minute you log onto your trading platform, the first thing you see are those candlesticks. Now some traders can swear by them, while others would rather not use it. Some even just take it out and just use the lines, use the Renko, use the Heikin-ashi, and all the other candlestick patterns they can think of. But the truth is, those Japanese candlestick patterns, they actually do work if you know how to use them. You know, I'm all for the strategy that works, all right? Because the goal is to trade to profit. So if a strategy works, then you can be rest assured that you will learn about that strategy on this channel, because this is a channel where we teach you to trade to profit. All right, so if you're new to the channel, don't forget to subscribe and click on the notification bell so you get the videos as they drop, because we're all about the Forex education. So we're going to take a quick vocabulary on trading using the candlestick pattern. So first off, you already know about reversals, you know about continuation, you know about the trend, you know about a market that is bullish or a market that is bearish. So a bullish market, of course, you know, is a market that is trending towards the upside. A bearish market is a market that's turning towards the downside. So why do we need to have these vocabulary in mind when we're talking about the candlestick patterns? Because these candlestick patterns actually do tell you a story. They tell you a story as to a market that is on the verge of a reversal, and they also tell you a story about a market that's on the verge of a continuation. So whatever strategy you trade, be it using the indicators, be it using the chart patterns and all, you need to have a firm understanding, a firm grasp of these candlestick patterns, because if you don't know the stories they tell you, chances are you keep losing money. So one of the major things I use the candlestick patterns for is to spot entry opportunities, to see the opportunity when the market is ready for me to go in or the market is telling me to stay back. So what's the story behind the candlestick pattern? It all started a long time ago where a Japanese rice trader decided to find a way to be able to scale up, stay ahead of the game, beat the competition by trying to understand the principle behind demand and supply. And that was when this person named Munehisa Homa decided to come up with a candlestick pattern, and he's been using it to trade rice. He used it to for rice trading for a very long time, and then technical analysis and Forex traders decided to imbibe this into the market, and ever since then the story has been good. So what are these features? What are these ways that you as a trader can begin to interpret the candlesticks, can begin to read it? Because like I said, the candlestick tells a story, right? For you to be able to understand the story they're telling you, you will be able to read it. Because if you can't read, then you won't be able to read the story. But if you can read, then you can read the story, interpret the story, and know how to convert the story into making money for yourself. So this video is to help you interpret some basic nitty-gritties of the candlesticks. All right, so when you look at a candlestick, like I said, there are so many parts of it. All right, based on the candlestick pattern, it has different parts. The first part is what we call the wick. All right, I'm just going to keep it very simple, like stupid simple. I'm not going to bore you with a lot of semantics and words and stuff like that. I'll just keep it very simple. When you pick a candle, like go to the market and buy a candle, what do you see on the candle? You see a wick, and then what next do you see on the candle? You see the body. Like, it's just simple like that. The reason why it's called a candle because it does look like a candle. Okay, so you see the wick, you see the body. So a candle that's about to burn out, of course you see the whole body will burn out, and you're just seeing wick standing like that. So you know that candle has been on a bearish trend, right? It's been pushing down, boom 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 boom. It has been pushing down, right, and it's burning out. So a burning candle is definitely indicative of a selling market, a pushing down market, right? It's burning out. And then the bullish candle, you see the whole body full, like at the bottom before, you know that this is a fresh candle, a brand new candle, a candle that is all the way up, right, going all the way up. So these are the different aspects of a candle. We have the upper shadow, the lower shadow. There's just the wicks, all right. The one up is upper, lower, like that. So next you have the body, and then you have the color variations of the candle. Depending on how you want to put it, the default color is red and green, but you can decide to pick any color. It could be white and blue, yellow and purple, whatever works for you. The bottom line is, you know the buy candle, you know the sell candle. So like I said, the candle has a body and the candle also has a wick, right? And when the market starts, there is a point where the candle pushes up from, or originates from, or starts from. So that point where the candle begins from is called the point where it opens, right? The point where it opens is the point where you begin to look at, because the minute it opens, then you begin to wonder where it's going next. All right, so when you see a candle, especially for a candle that's pushing towards the upside, you tend to see the open aspect of it below, right? So the candle opens at the bottom, it pushed out, because all of these wicks, what they tell you is that they tell you that price has attempted to reach that level. Remember, the whole essence of the forex market is exchange rate, looking to buy or sell based on a particular price. So when this market pushes down, it means that it has pushed down to a price level. So this week right here, what it's telling you is that price has tested that level, so low, and then pushed back up. And then what did it do? It pushed all the way up, it pushed all the way up. Let me get a pen. So the market attempted to get to this low, and then it pushed all the way back up, and it continued to push all the way back up, and it pushed all the way back to that point. So that's the high. That is, it attempted to push up to that point, and then what happened? Price pushed all the way back down and closed here. So the candle did open at a point, and after that open, it pushed down. So that's why that part of the wick is called a low, and then it pushed all the way up to this point, which is called the high. Why is it called the high? Because for the history of that candle, that was the highest it went, right? For the history of this particular candle, that was the highest it went. So that's the high of the candle, and then it pushed all the way down and closed here. Right, so that's for a candle that's moving in the buy direction. Like I said, it could be any color, white and black, red and blue, whatever. Just know the buy candles and the sell candle. Now the inverse is the case for the sell candle, right? So the sell candle opens at this point, and then what happens? It looks like price is going to push up, right? It's looking like it's going to be a buy. So that point is the high. So price created a high at that point. So at that push up, that's the highest point it tried to reach, but they were not able to sustain that up thrust. They were not able to sustain that upward momentum, and then the market pushed all the way back down, to this point to create a low, and then pushed back up and closed here. So that's for a sell candle. So the direction of the market, direction of the candle will tell you that if it's a buy market or if it's a sell market. So a sell market will always have the candle opening and pushing all the way up and then pushing back down to close at a level. Now the very minute the candle closed, wherever the candle closed at is where the next candle will open from, unless there is a gap, all right, unless there is a market gap. Maybe price close here, on Friday, and then the market closed, and then the market opened on Monday, and then the candle opened at this point. So that's where you have a gap, a market gap. But if there is no market gap and the market is going in the way it's meant to go, at the point where this candle closed, another candle will open immediately the minute that, you know, the duration of that candle is over. So if it's a daily candle, at the end of the day, the next candle opens at that exact point where it closed. And if it is a buy candle, the next candle opens at that exact point where it closed. So the new candle opens at the point where it closes. That's really why you want to know the point of close, the point of open, because that's when you begin to know your levels of high, your levels of low. And if you are a trend line trader, you will be able to plot your trend line, taking note of these levels of highs and these levels of lows. So now you know the path of the candlesticks. You know the point where it opens, where it creates a low, and then where it pushes all the way up to create a high and then closes. So noting these areas will help you trade the market, or will help you spot entry opportunities the right way. So the question now is, now that you know the path, now that you're able to identify the path of the candlestick, how then does it work? What it does is I provide a very detailed and accurate information on price action. That's the reason why, like I said, a lot of traders swear by the candlestick, by the Japanese candlestick. They swear by it. Why? Because it actually do tell you price action. It tells you what is happening in the market, what's happening behind the scenes. All right, so if you are a trader like me that's done all the analysis, you just need something that will tell you to enter now or wait, then you need to have a clear-cut understanding of the candlestick, because these candlestick understanding will help provide a detailed information on how you can begin to read and interpret the market, which is called price action. All right, they also provide a graphical representation of supply and demand. So you know, it's basically based off what is happening behind the scenes. So regardless of the time frame, 5 minutes, 10 minutes, every candlestick in the different time frames, they all tell a story. So on the 4 hours time frame, for every 4 hours there's a new story being told, right? So the candle closes at the end of 4 hours, and then it opens at the new hour to tell you a new story. So if the supply is such that price is, you know, the particular pair is being dumped or poured into the market, you will see that being shown by the candlestick. So all of these things will help you know ways that you can begin to bring this into the market. Now there are lots of different types of candlestick patterns. Some of them do work, while some of them are just stuff you just ignore because they're just all over the place. So today I'm just going to talk about a few of them. All right, I'm just going to talk about a few of them. Like I said, in my 17-part video, I talked extensively about the candlestick pattern. So you will find this video on my Trader Profit Masterclass video, 17-part video. And aside the video, for those who like physical classes, if you're in Lagos, don't forget I have a physical class coming up in September. All right, so the information for that class will be provided for those who are interested in it. So on the description section of this video, click on the link right there. It takes you straight to my WhatsApp. All right, and then we can talk about ways that you can attend the Forex training for September. That's for people living in Lagos. Okay, so we're going to talk about the Doji. What's the Doji about, and how can you trade the Doji? What story does the Doji tell you? The Doji is formed when the opening and closing prices are the same. You know, pretty much like a plus sign, all right? A plus sign, a cross sign, a dragonfly sign. Just basically you seeing price opening and closing at the same point. So it invariably means it doesn't got nobody. So nobody on it. It's just there like that. The length, of course, will differ. You see different types of it and all. But what a Doji simply tells you that there is exhaustion in the market. It usually follows a market exhaustion, price exhaustion, trend exhaustion, or it tends to follow a consolidation. So when you're seeing Doji, you begin to notice that this is a consolidating market, or this is the market where the steam is probably, you know, it's losing its steam. Like I said, the candlestick tells you a story. So if there's not much money in the market, if a lot of players are out of the market, you begin to see Doji all over the place because price opening and closing at the same place. That's why at Christmas time or major holiday times like that, or times when there is not much trading volume activity going on in the market, you tend to see Doji all over the place, like Doji. So it just tells you that there are different, that there is little or no money, all right, volume in the market. So there's the Doji Star, the long leg Doji, Dragonfly, Gravestone, blah blah blah. So we're just going to talk about a few of them, all right, shortly. So first up, let's talk about the Gravestone Doji. So like the name implies, it does look like a gravestone, doesn't it? Herein lies GBP, JPY, mother, father, grandfather, godfather, every father. You just see that like that, gravestone. So the Gravestone Doji pattern does look like a gravestone. So what happened? What's the story behind this? What's it telling you? It's simply telling you that the minute the market opened here, right at this point where it opened, it pushed up, like it pushed up. There was this big push up, like, and you're like, wow, this is going to be a very, very good buy market. Then what happened? It pushed it all the way back down. All the way back down to the exact point where it opens. So opens and close at the same point. So that's just what a Gravestone Doji tells you. So of course you'll agree with me that the reverse will be the case for a sell. So the sell candle opened here, and then you're expecting it to continue, but then pushed all the way down, and pushed all the way back up. So when you see this, of course they call this one a dragonfly. So it's pretty much like a flip, you flip the Gravestone Doji, and then you have this one, right? So that's the Dragonfly Doji. Now, it is formed when the open and the close occur at the low, blah blah. So you already know that. So the flip of it is the Dragonfly Doji, formed when the opening and the closing prices of a security is at a high. The opposite of the gravestone. I already said it. Don't let us start speaking too much grammar. Like I said, this is going to be very simple. So now you already know that there is a Gravestone Doji, there's a Dragonfly Dojis, and you tend to see these Dojis at areas where there is price exhaustion, at areas where you get to see that the market volume is reducing or low, and all of those areas, consolidatory areas, consolidation and all that. So Dojis are not exactly things that people trade, but one of the things that you can actually use a Doji for is to be able to identify levels where you begin to expect price to change direction. So imagine that you're seeing dojis at a supply zone of the chart. Then those dojis are simply telling you that price is consolidating. There is a contraction. There's a contraction going on, and then the more time that those contraction happens, you tend to see a price moving in a rectangular fashion, begins to move sideways, and then you expect some kind of expansion, boom, and then follow the market to the down like that. Sell it. So it kind of gives you that feel that price is about to reverse, make a major reversal after a particular trend, or a particular trend is about to finish. Hope you're getting it. Yeah, I talk fast. Yeah, I talk fast. I'm a Forex trader. Okay, so the next we're going to talk about is bearish bodied spinning top. So the bearish bodied spinning top is another type of doji, but this time it's got a body. All right, it's got a body, but the body is not that big, but it's small. So why is it called a bearish body? Because it is in the bearish bodied form. Okay, so if your bearish color is red, then you see it as a red one. The bearish color is green, you see it as a green one. All right, so it looks like those spinning top, like those things you just take on your hand and spin, and it goes like that. So this pattern is formed when the candle closes with both the upper and the lower wicks at the same size as the body. So the body is usually bearish. Now with this, I'm going somewhere, because that's the point where we're going to stop this class for today. We're just going to talk about one particular candlestick pattern that will help you trade to profit. So the other part of it is the bullish body. So the bullish body has got a body, and the body is green. All right, so this is a bullish bodied spinning top. Now there is a way you can combine all of these and get something, and that brings us to the evening star, the evening doji star, or the evening star. So this is one candlestick pattern that will help you trade to profit. If you identify it, you will be able to trade a profit. Why is that? Because you see a bullish candle followed by doji, and then you see a bearish candle, and then you see a bullish candle followed by bullish bodied spinning top, and then you see a bearish candle, then you know that you are about to go evening, like it's almost good night, like hello, good night, so evening doji star. That's how you identify it. You see a very, very strong buy candle, right, and then following closely you see a doji, or you see a bullish body doji, kind of top, spinning top. and then you see that. So the next thing you're expecting to see a sell market, right? You're expecting to see a sell market. So that confirms your evening doji star. What does this particular pattern tells you? It is a sell reversal candlestick pattern. All right, that's what it is, a sell reversal candlestick pattern, especially when you trade it or when you find them on a daily chart. All right, when you find it on a daily chart, it tells you that this is a good market to go. So all you have to do is wait for pullback the following day, or some traders are just aggressive like that. At the close of it the next day, they sell it. In fact, before the market closes, to take them to the next session, they enter the sell. That's their strategy. While some traders will fib this sell candle, right? This is technically the confirmation candle, wherever. So they fib it and then target the 50% level or 61.8% level and enter the market from that point, because that point will now be the pullback point, right? So they'll go halfway to it and then fall it all the way back down. But what this is telling you is that you should sell your market. So an evening doji star is a sell reversal candlestick pattern. Did you get that? Remember when we said reversals, we talked about continuation, we talked about those trends. This is what it all means, because there are some candlestick patterns that tells you that a reversal is imminent, while there are some candlestick pattern that tells you that a continuation is continuous, right? Got it? Okay, so now that you know about the evening doji star, let's take a look at the inverse of it, the morning star. Like, there are some patterns you see and you know that it is morning, like hello morning or good morning, that kind of thing. So this pattern is formed when a bearish candle is formed. So you're seeing a very massive sell candle, like boom, 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 boom. It's looking like it's just going to keep going down, and you're thinking, oh, this is going down. And then suddenly you see a doji beside it, or you see a bearish bodied spinning top beside it, and you're like, okay, and then next what follows, you see a bullish candlestick. Now sometimes these things tend to happen as a gap, right? You know, I talked about the market gap, because this after it opened somewhere here, it pushed up and then pushed all the way down, close here. So naturally you expect the candle to open like this, and then it tends to just gap like that, just gap, and then gives you this. So sometimes, not always anyway, sometimes it does this gap, especially, you know, on the daily time frame. Like I said, this pattern is best traded on the daily time frame. If you go start looking at it on lower time frames, you just might miss it. There are other candlestick patterns that you can trade on lower time frame. We'll talk about that in the 17-part video or in subsequent classes. I don't know. Okay, so this one, the morning star, is a flip of the evening star. So this would signal a bullish reversal. So this technically is the pullback. You remember what I said about a pullback? Yeah, you should look to see the pullback. So that pullback, boom, you enter your buy, you know, all the way up. Yeah, scale the profit, scale the profit. So that's what a morning star is. It's a bullish reversal pattern. So you already know how to spot a doji. You know how to spot a bearish and bullish spinning top. So spotting an evening star and spotting the morning star would be a piece of cake, right? The candle could be anything. It could be any candle. Just make sure that for a morning star, you see a good solid sell candle followed by either a doji or a bearish body spinning top, and then see a buy candle, and then follow the market after the pullback. So like I said, you could fib the confirmation candle, boom, and this will be a trigger candle, that pullback candle, and then you ride the market all the way to the top. Like I said, this is a channel where we teach you how to trade. We teach you simple strategies that will help you trade the market profitably. Because if the strategy is not working, you don't want to use it. Okay, this is Forex. You don't want to go, you know, becoming sentimental like my teacher taught me this. I must use. No. If it's not working, don't use it. If it doesn't give you money, don't use it. If it doesn't work, don't try to force it. All right? If it ain't broke, don't fix it. So if this one doesn't work, don't use it. It's just simple like that. So candlestick patterns, they work. All you have to do is know how to use it. And how can you use it? By using it to spot entries, spot reversals, spot continuation, and know how to stay in the market, get out of the market, but just watch. Thank you for watching. This is where we're going to come to the end of this video. In the next video, I'm going to walk you through a market chart where we'll try to identify these patterns. So thank you for watching. Till I see you again next time. Live your best lives. Bye-bye.